Hi trader, welcome to Elite Currency. My name is Chris, and today's focus is on the euro dollar and pound dollar. Some interesting developments going on those pairs for the next 2 trading days. I want to start with the pound dollar weekly chart here, and the reason is still that weekly candle that is very dominant, I think, in this analysis, as I discussed on the weekend. And basically, price is making the retracement that I thought could happen of this candle. But I think that considering the strength of this bearish candle, that this retracement will not break the high, that's for sure, or not for sure, but that's very unlikely. I think that the 38 or the 50 fibs will probably be the most likely retracement spots for this moment. Price is at the 38.2 fib right now. It could maybe make a little bit of a push to the 50 fib, max 61.8, and I would expect the price to fall and continue down to the minus 272 target. I have a purple line there. That is the low of the September monthly candle. So that, of course, is also a potential bouncing spot in support. So I would expect price to do something like this, make this a little bit of upside, then potentially, and then fall down to the minus 272 target, which in turn could create some kind of a bounce or sideways move. We'll have to see what happens then. For the moment, though, let's zoom in to the daily chart, and you can see that this downtrend channel is intact as well, and that basically price is making a retracement within that downtrend channel. Yesterday was a slight bullish candle with a wick on top. Now that particular wick was not very strong in my view, because if you look at the close, between the close and the high is only 42 pips difference, whereas the candle itself is about 110. So it's not a massive wick. That does not necessarily indicate the reversal. It's more of an indecision candle. It's actually slightly bullish, so it could push higher. And what I'm keeping an eye on basically when looking at the 4-hour chart is I had the fib on the weekend from here to here. I've removed that because I think that the retracement now, considering this 4-hour candle is this one right here is too strong for such a let's say relatively smaller fib. So I use the wider fib now because this bullish move, this bullish retracement is going deeper than I expected on the weekend. And the weekend I thought that price would stop between 131.25 and 131.75, and it actually stopped at around 131.80. So that was not really too off, right? It was in my zone, but I don't think that the zone will hold it. It stopped it, right, for a while. 131.80, 131.75 kind of was the stopping zone for the pound dollar. But considering the fact that there's such a decent strong candle here in the 4-hour chart and price is going sideways, I don't think it's going to be enough for price to stop it. I think it's going to make a little bit more upside. So I put the fib from here to here, and this could be basically a third wave, and this could be a wave 4. Well, if that's true, then typically it stops at the 38.2 fib or the 50 or the 23.6, but it's already above that. So 131.90 could be a stopping spot together with the channel. Well, 132.42, right? Because that's the 50 fib, and there are bottoms in here. And if you look at the momentum, there's momentum, sideways zone, and momentum. So this particular sideways movement, we have the red box here, right? That is a resistance zone as well. So that's another factor besides the 50 fib. So definitely 2 points of confluence, I think, 2 POZ zones, point of confluence, at the 38 and the 50 fib. And I'll be looking for bearish candlestick patterns on the 4-hour chart, maybe the 1-hour chart even, for a turn down to test 130 and then eventually even 129 probably. All right, so those are the targets I have in mind. When looking at the hourly chart, you can see that this bullish momentum is pretty fast. So it seems to me that this is one swing, this is one swing, and there could be another swing, which leans maybe slightly towards the 50 fib. If you look at it from this perspective, it could be something like this, right? A bigger correction like that. So I think from this point of view, we'll have to see the 50 fib maybe a tad more likely, but also, of course, interesting to keep an eye on this trend line. All right, that's the counter trend line, and it's a channel. In fact, if you connect the tops like this, so there's a bit of a channel within this downtrend channel, and in fact, you can also draw, of course, a trend line like this to connect the bottoms of this downtrend channel like that. So there's a bit of a bullish channel, retracement channel within the bigger bearish channel. So, you know, that could lean towards the 38.2 fib. So I'm keeping an eye on both, but ultimately the 50 fib may be a tad more likely, and a break of this bullish channel, this counter trend channel, a break of that could also spark, of course, the downtrend continuation right about here. Looking for break, pullback, continue basically on the pound dollar. Now, if it breaks above this 50 fib, and specifically the 61.8, in fact, that's the very last retracement I would expect, then that does invalidate, well, not invalidate, but it makes the wave 4 much less likely. And if it breaks above the 50 fib, it's really breaking above this channel. In fact, it's already breaking above the channel if it hits the 50 fib, but that's kind of an early break and could be an expansion of the channel. I wouldn't be too worried about that. But if it breaks above that 50 fib, it's really seriously breaking through that channel, and the whole bearish kind of structure and analysis is out of the window. Would have to reanalyze it, and you know, something else is going on. Perhaps this is an ABC correction, and you know, because once it breaks above this 50 and the channel, while the bearishness is not there anymore, and we could start maybe a bullish swing to the upside, right? So you got to keep an open mind, be flexible, and that is something that could happen. Although it looks so bearish now, the break above that 50 fib is certainly very worrisome for the downside, and upside scenario is becoming more a serious kind of factor to think about. All right, with regard to the euro dollar, well, basically price has broken above this falling wedge. We talked about it, and I thought that there could be a good trade at the bottom here somewhere around 117, but price didn't make it that far actually, just went sideways and then broke to the upside already. Break, pull back, continue. So unfortunately for me, it didn't go deep enough to hunt for a long setup, you know, upon the pullback. But it did make a break that I also discussed. That was actually the main trade, which is the breakout. So hopefully some of you are in that trade and you took the breakout. I was talking about 4-hour candle, right? So this could have been a good 4-hour candle, or here. And maybe some of you thought about this candle, which is also an option as well, although it has a little bit of a wick. It, you know, is a bit on the late side compared to entries around here upon the breakout, but could be possible too. So when looking at the hourly chart, right, you can see price has made a pretty good dominant candle here. And well, if it breaks that low, then something else is going on. So would definitely be surprised about that. So price should stay approximately above these support trend lines like this. Otherwise, a bigger kind of correction might occur, and this could have completed a 5-wave for wave 1, and this could be a wave 2. So if it breaks through these trend lines, and specifically through this low here, then I would probably put a fib from this low to this top, right? And I'll be looking for probably price still to get down to the 61.8 or 78.6 fib at around 117.12, 116.90 for a bounce up. All right, and then an ABC correction could occur down to those fibs. But as long as price stays above this, then upside is likely, and especially if it breaks above these tops here, 117.80, then there could be a wave 3 kind of breakout scenario, and more momentum could occur up to the minus 61.8 target at 118.50, perhaps even further up to 118.90, let's say 119, where there's a trend line as well. All right, and I discussed the 119 resistance in previous videos. So yeah, basically this could be breakout territory right here in this zone, and then of course these could still be stopping spots. We have to see how much price pushes through, if it does, and how much throughout today and maybe tomorrow. But those are targets. Of course, if price then starts to break above 119, there could be even a bigger breakout occurring. So basically, we'll be keeping an eye on the 4-hour charts for bullish breakout candles, or even daily breakout candles around 119. So yeah, that's about it. I think looking like a break of the bearish chart pattern here that indicated the bullish reversal, and we got the break, and it seems now that price is on its way up to test that resistance. If it doesn't and it fails for whatever reason, then as I said, I would just look for a retracement and still go long about here for that move up towards the trend line. All in all, once again, just to recap, This is looking like a wave 3 and wave 4. So from this perspective, it looks like the wave 4 could be over at the 23.6 fib. However, keep in mind that if price makes an ABC zigzag like this, that this could be an expansion of the wave 4. Wave 4 does not have to necessarily be finished here. This could be a W, this could be an X, and down we go again for Y. So what could happen is an ABC, and then we finally finish the wave 4. So we'll have to keep an eye on how price responds at the 23.6 fib, right? Because at this moment, we don't know if this is really the uptrend starting or just a bigger correction. So keeping an eye basically on this 4-hour chart. If it makes something like this, then this, and then this, and the C is equal to the A, it is probably an ABC. So that is something that we can keep in mind, as price makes this upside. Keep in mind that price might stop actually around 120 and still make one more downside. That's my main message. 119, 120, 121 are all kind of resistance spots that could send this back down to challenge 117. All right, that wraps up our review of the euro dollar, pound dollar, a bit longer than usual, but went into some details here. Thanks for, of course, liking, sharing, subscribing. Check out elitecurrency.com for more free material, analysis, etc. And wish you all great trading. Cheers.